Hey guys, what's up? Taylor Carver here from thetradinganalyst.com. We're going to discuss the market direction both in the short term and in the long term. I'm going to start with the short term levels here that I really think you need to watch. I'm also going to discuss the correlation between bonds, TLT, and the S&P 500. You need to stick around until the end because if you are concerned or unsure about the future market direction, and I'm talking about the long-term direction. I'm not talking about the next couple days or the next couple weeks. I'm talking about the next couple months and years, because a lot of people are really worried about the market, and people are talking about recession, people are talking about bear market, and this is going to be a really extensive video that's going to help you out and really give you a better understanding of the overall health and future direction of the market. Okay, so I'm going to start off with the short-term levels here. First and foremost, in the short term, I think we can see a downside move, okay? As you can see here, this action looks very similar to this action over here, okay? Last time we had a dip, boom. Here's another one, right about there. Trading sideways, broke out of it. Trading sideways, broke out of it. Trading sideways right here, broke out of it right here. And as you can see, the action looks very similar, okay? This isn't a one-day move, okay? You should be very, very, I don't want to say cautious, but I guess more bullish. If there's just one day that is bearish, the stocks don't fall out of the sky. So I'd be looking for a bounce very, very soon if this was just a one-off day. But what we had here is we were strong up here, sideways trading, and then boom, we had a gap down. Here we had a dip. It obviously closed green, but still a dip nonetheless. A failed breakout here, red day, gap down here. A gap up today which failed and then closed under this resistance. We also closed below this moving average as well. So it's not just one day. We basically, this has been setting up for a week. And if you're wondering, well, Taylor, you've been bullish this whole time. How can you all of a sudden be bearish? Well, because I want to see it actually break, because we could have action like this and then we could head higher, okay? But with action like this and then a break finally today, it all adds up. I'd rather be a little bit late and right than early and wrong. Okay, that's what a lot of bears, and I hate to use the bull versus bear argument, but that's what a lot of permanently bearish people, where they get confused and they get ran over by bullish trends because they try to short strength, and time again they get ran over and they lose money. Okay, so anyways, it looks very similar to this action. You can see gap down, red day, closing below resistance. Same thing here, a failed breakout followed by the next day, gap down, and don't let this green candle fool you. This is still a red candle. It just closed above the open, which is why it's green. And then boom, we broke right here, and you can see down move happened there. Same thing with here. Okay, so you get the point. Short term, I think we can see some downside. All right. So as far as levels, we've got right here, and this is the SPX. Okay, the SPX is, in my opinion, the most accurate chart here at predicting future market direction. It's also the easiest to chart. The NASDAQ is a little bit erratic, and same with the Dow, because I'm not sure about the NASDAQ, but the Dow only has 30 stocks, and for example, if one stock has a really good day or one stock has a really bad day, it can really affect that index, whereas the S&P 500 has 500 stocks. So one stock, yeah, if it's Apple, it's going to affect the market. But you still have 499 other stocks that are going to affect it. Okay, so level right here, about 2,939 is that previous support. Okay, that's that previous support. I'm sorry, previous resistance. You can see that, which is now support. All right, that's my first target. All right. Now we also have this trend line right here. All right, that's the first conservative target. I think the market is going to bounce somewhere between here and here. All right, between here and here. Because if it doesn't and it breaks this low, these lows, then I think we can see a big move lower, because then we'd be making lower lows. Okay, but right now we're making higher highs and higher lows. All right, so that's the first bounce zone between these two levels. All right, short-term downside, longer term, these are some buy zones that I think will really push the market higher once we get there. Okay, unless something changes or we break it, which is totally possible. But right now, I think that the more likely scenario is that we'll bounce somewhere between those two levels. All right. So now I want to discuss kind of the bigger picture here for the market. All right, and I'm going to go to the monthly chart right here, and here we go. Okay, so first I want to kind of discuss the structure of the market and what we're seeing right now, and if it looks like stuff we've seen prior in past corrections and so on and such forth. Does this look, honestly, look at this. Does the action that we're seeing right now look more like this? Okay, or does it look more like this? You be the judge. Or this. This. Or this. Okay, those are your options. Or this. And this. Okay, the difference is right here we had some major dips. Okay, we had some major dips, and we basically traded sideways right here. Over here, we're trending up, very little sideways trading, and no real dips before. We just went up, and then we just started going down. Okay, and this dip didn't get a bounce. Okay, we headed lower, but it never recovered. Okay, notice how over here there was a big dip here, so that was kind of a dip that you saw in the market. And these dips, these prior dips, are important because when the market dips, it resets. Okay, so markets need to be reset before they can head higher. Okay, right here we just headed higher. We didn't have any real dips. Okay, until it actually dipped, and it was a big dip for about a year. We headed lower. Same thing over here. Prior to this heading lower right here, and this is, by the way, this is 2001, headed lower, and this is 2007, 2008, when we headed lower. Both those were bear markets. All right. Now, note right here, we had a dip here, we had a big dip here, and the other thing that I want to discuss too is this was a 20% dip in the market. Okay, 20%. This bear market over here, I think this was about a 50% dip. This was like a 33% dip. But a lot of other bear markets were only 20%. Okay, so not all bear markets are the same. These were actually two of one of the worst, and they were kind of back to back within 7 years of each other. Okay, but most bear markets prior to that were not nearly as bad. These were one of the worst. Okay, for example, in 1987, and my charts don't go this far back on this platform, but in 1987. We saw a 20% dip that lasted for about 4 months. Same thing that we did over here. Okay, 20% dip is considered a bear market. Okay, so a lot of people don't really consider this a bear market, but I bet if you look at a lot of people's portfolios at the time, it was a bear market for sure. And a lot of stocks started heading lower really at the beginning of 2018. We had that climb in the market, but a lot of stocks were underwater. I mean, at the time I was noting it as well. You had a lot of stocks in downtrends. Caterpillar was in a downtrend, a lot of other stocks. But the other thing I want to mention is that this was a 20% dip, and Never in the history of the market, of the S&P 500, has there ever been two 20% dips or more within 5 years of each other. And that only happened once, where it was 5 years. One happened in 1982, and then another one happened in 1987. And that was 5 years. All the other ones were 7 years, 10 years, or longer that happened. So if you're expecting a huge dip in the market, most likely, again, anything can happen in the market. Just because it hasn't happened in the past doesn't mean it can't happen. But if you're expecting a huge dip, it likely will not happen because it has never happened before. We got that 20% dip here, and most likely it's not going to happen until about year 2023. All right? We got 4 years left. All right? So there's that. And this, again, remember, so that's a 20% dip. All right? Here was a big dip here. Here's a big dip. Here's a big dip. All right? And we just reset after trading sideways for a while. Doesn't that look kind of similar? Kind of here. Dip, dip, and a lot of basically sideways trading. If you look at this, this looks a lot more like this than it does, this. This isn't sideways trading. Okay? This isn't sideways trading. This is a trend up. This is a massive trend up. Same thing with here. Massive trend up. All right? Massive trend up. But right here, we needed a little reset. All right? So get your brain wrapped around the idea that we can add much, much higher in the market. Okay? Because right here, a lot of people think we've just been in this crazy bull market that hasn't had any rest. Well, we had a huge 20% dip, which technically is considered a bear market. Yes, it was very quick, but it was a bear market nonetheless, and virtually sideways trading, okay? We're barely higher than we were in 2018, okay? So a lot of trading sideways. A lot of people think, oh, well, that's bearish. We haven't broken over that level. Well, same thing happened over here, and look at what happened after that. It's just a rest period. It's sideways trading. When you have sideways trading, it builds up energy for moves higher. That's why right when we broke out of this range, you can see that, broke out of that range right here, rested for a couple months, and then boom. Okay? Boom. Boom. All right? So that's what I think can happen here. Now, I want to discuss TLT, and how it relates to the market. So, TLT. And again, this is just one data point, but it has been 100% accurate at predicting the rise and fall of the market. Okay, so when TLT peaks, I'm just going to give away the theory right here, or the thesis rather, is that when TLT peaks, TLT heads lower and the market heads higher. I'm going to show you all these times that TLT has peaked. All right, so there's this time right there, there's this time, and then there's all these other times right here that I'm going to discuss as well. So here, right here, this is 2003. I'm going to show you the S&P 500 chart right here. Boom, 2003. The market bottomed, we headed higher. Boom, all right? Right here. Here is May 2005 on the market. Okay, what happened after that? We headed higher. I'm going to show you May on TLT. Right here. What do you know? That was a peak for TLT. TLT headed lower, and the market headed higher. Next one, December 2008, right here. All right. I'm going to show you the market. Oh, what happened there? There you go. The market bottomed just a couple months later and catapulted higher for one of the biggest bull markets that we've seen. Then TLT, this peak over here. This is the middle of 2012. What was that? Yeah, about July 2012. July 2012. What happened there? Right here. Here's July 2012. Oh, what do you know? The market catapulted higher for another what is that? Well, about 3 years. Boom. Boom. All right. Sorry, I'm a little... boom is my favorite word today, apparently. Okay, so here's another time. Here we are in the market right now while TLT is doing this up against this upward channel once again. As you can see, every time TLT has come up to this channel, it's gotten rejected. Boom, 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 boom. And each time we've seen this, so about, 7 or 8 times, the market, when TLT peaks and hits this channel, the market catapults higher. All right? So, kind of wrap your head around that. All right? This is something that has happened about 7 or 8 times in the last 20 years, each and every single time. It has predicted a market move. Now again, nothing is for certain. Nothing is for certain. But I've shown you the structure of the market. I've shown you how TLT has performed. And I really want to get your head wrapped around the fact that we could head much, much higher. And I want to show you also the normal, unfortunately my monthly chart on this platform, this is my E-Trade Pro platform. It doesn't go back further than 25 years. We're looking at 20 years. But the market here, this is more of a normal market environment that's happened before we had the dot-com bubble in 2001 and then the financial crisis in 2008. These were two back-to-back of some of the biggest bear markets we've seen, and the market doesn't normally do this. Okay, the market normally does this, where we have this, and then kind of sideways trading. And this is everyone talks about this bull market like we haven't had any kind of rest. Well, yeah, 2016 to 2018, that was huge, huge move. But before that, this is, I don't know if you remember this, but this is a huge, choppy period in the market, and it didn't go anywhere basically for 2 years, 2014 to 2016. A lot of people have short-term memory loss, and they don't remember far back enough. But if you remember what this market was, just sideways trading, okay? And what that does is it gives the market a rest, okay? So 2 years, this is I don't want to call it a bear market, but it's a rest, okay? Because we didn't get a 20% dip, but we did get a pretty big dip right here. I think it was like 15%, okay? 15% was that biggest dip right there, but really just sideways trading. The times you want to be worried is, notice how on this bull market, 2003 to 2008, right here, we basically headed higher the whole time, okay? We had some little rest, a little bit, but nothing like this, okay? No sideways trading like this, okay? Nothing like this either. All right, we just headed higher, smooth, and then boom, lower. All right, so that is why we headed lower, because we needed to reset. Right here, we got to reset here. Okay, we got to reset here. All right, so we've already had our reset. We've already had our consolidation. Okay, really wrap your head around that. It's a different, for some people, it's a different way of thinking of the market. They think that, this is going to be the top, this is going to be the end of the world. But if you really think about it, this could be the beginning, the very beginning of a massive bull run. All right? Massive bull run. All right? The other thing that I want to note, too, and I'm not trying to get political, okay, but the last bear markets were at the end of political terms. Right here in January 2001, that was when Clinton was leaving office. All right? That's when Clinton left office. Right here. Right at the top. Boom. All right? And then Bush became president right here. And then was president all through here. And then when did he leave office? Right here. Right here. Okay? Right here. All right? Oh, wait. I'm sorry. No, he left office right around here. Okay, right around there. So, Clinton ending, Bush ending, okay, at the end of presidential terms. This isn't a huge factor in my analysis, but it's just something I noticed today. that I wanted to kind of throw your way. Now, Trump has at least one more year of being president. I personally believe, and I'm not saying I'm voting for him or that I support him, not that there would be anything wrong with that, or voting for anyone else, but he's likely going to stay president again. The last, like 4 or 5 presidents have all served 2 terms. Okay, so I don't think that it's going to be different this time around. So that's another factor right there. Okay, so again, wrap your heads around the fact that this could be the beginning, the very beginning of a massive bull run. Okay, the very beginning, not the end, but the very beginning. Okay, and think longer term. Longer term. Remember, I think that the market can head lower in the short term. We could even get more choppiness before heading higher. But as far as a longer term view, I'm not talking about weeks or 1 month. I'm talking about several months or several years in advance. I think we're going to be much higher in the market. So that's all I got. I hope you enjoyed this video. If you have any questions, please let me know. And if you don't already know, I run a premium trading service here at thetradinganalyst.com where I share real-time trading alerts. Right now, most of the alerts are for options. We do a little bit of stocks, but we are actually going to be doing more stocks in the coming weeks because I have developed or am currently developing a strategy here that trades IPO stocks. So if you're interested in that, please sign up and join. So these alerts right here, all of these entries and all these exits, I send it out via text message in real time. These are live trading prices. And don't worry, because the vast majority of these trades are put on a watch list ahead of time, so you're prepared for these trades. We're not just throwing these alerts out and hoping that you can follow along. So these alerts are profitable. You can see the average win is almost double the size of the average loss. You can see in the last 13 months, the profits from following all these alerts is almost $300,000 in just over a year. $300,000 in profits. This is not a total account value. These are actual profits you can add on to your account if you're following all of these alerts throughout the year. We have up periods, we have down periods, we have periods where we're kind of going break even a lot, but over the long run, you can see that over the last year, almost $300,000 in total profits. So if you're struggling to make consistent returns in the market, don't worry, we've all been there. I've been there. If somebody tells you they haven't been there, then they're just flat out lying. And if they aren't lying, then they're going to get there soon, because just a natural course of action. The market likes to educate people. Okay, they like to educate people. And everybody's going to have a losing streak. So my point is, don't worry about it. But if you would like help getting out of that rut with someone who's been doing this for a decade, who's been trading in up markets, down markets, sideways markets, I've seen it all. I've been through the ringer. And I found a very profitable method of navigating the market. If that sounds like a good idea to you, then I'd like you to sign up and join today. And I'll start sending you my trades as early as tomorrow, as soon as the market opens. So I look forward to having you as a new member. There's also so many other member benefits. I make videos, private member videos, the watch list, the educational portal, where there's over 15 to 20 hours of educational content that I've recorded for your perusal that's going to help you grow and get better as a trader. I'm also available virtually 24/7 to help you navigate the market on the live chat. You can respond to any of the text messages, and I'm there to help you and answer any questions that you might have. So, most importantly, these alerts are going to put money in your pocket, and I'm going to send you these real-time entries and exits with exact prices, so you're going to know what to do and when to do it, and you can take out the guesswork and stop worrying about trying to find profitable trades on your own. All right, that's all I got. I hope to see you in there. I hope you make that decision for yourself, and I look forward to seeing you in there.